With the war against Iran underway, financial markets are seeing an impact.
That's right. The market's holding steady today for now. But yesterday we saw the Dow Jones down nearly 1,000 points at the start of trading. Right now, though, you can see the market up 185 points, give or take. CBS News business analyst Jill Schlesinger joining us live now with how the war could affect finances and what you can do to protect yourself. Good morning, Jill. Let's start with oil, which has jumped over the past few days in price. When will we see that at the pump? I know we are a little bit already, right?
Yeah, I mean, it was so quick, right? Almost within a couple of days, we saw the price of gas going up by 10, 12 cents a gallon. I think that you have to remember half of the cost of a gallon of gas is based on oil. And so oil is up. That means we're going to see a larger impact in a matter of weeks. Just remember that, if this all ended tomorrow, we would kind of retreat to where we were. But if the fighting persists, if it spreads, experts say that we could be facing another 30, 40 cent increase in a gallon. Look, there's not a lot you can do. You can try to drive less. You can try to take public transportation. I guess I'm just warning that the increases are not going away just yet.
What action should people take right now to prepare for a potential longer haul?
When I feel anxiety and uncertainty about the world, I kind of try to tune out a lot of the noise, but focus on what I can control. And so to that end, I do have a little panic protection plan. I literally started this in 2008 and 9 when I was feeling like people were just freaking out about the financial crisis. So every so often, you'll see we all feel a little panicky. And the plan basically goes through three big objectives. One is to make sure you've got 6 to 12 months of living expenses in an emergency reserve fund. If you're short, maybe you want to temporarily reduce some of the spending you're doing or some of your retirement plan contributions, beef it up. If you've got that done, then how about whittling down that high interest debt? Maybe it's a credit card balance, maybe it's an auto loan or a student loan. Try to pay that down and accelerate. And if 1 and 2 are done, then maybe it's time to boost your retirement contributions. It's a great proactive step to take that doesn't feel reactionary.
What should investors do? We talked about what we personally can do. What about investors?
I think that it's really crazy. We continue to think we could figure out when to get in and out of markets. How about this? Taking no action in your 401k, that is an action in and of itself. Remind yourself, you are saving for a long-term goal. It's probably years, maybe decades in the future. And if you are contributing to a retirement account, how wonderful that the money that is automatically coming out of your paycheck is going into saving for you. You are buying shares at a big discount to the levels that we just saw a few months ago. So keep your head down, stick to your game plan. Don't be dissuaded by the news flow. You are on the right track.
Jill, thank you so much for your time and expertise. As always, we really appreciate you. And you can catch Jill Schlesinger regularly on CBS Mornings.